market is not a reflection of the economy. When people say, oh, the stock market's doing great, you need to run. You need to run and tell them, go do something else, or slap them with the paddle in the back of the head, because the stock market is not a reflection. It's a reflection of the ultra wealthy and of the super rich. It's not a reflection of normal common folks. It is the reflection of the super ultra rich. How do I know? Well, let's look at it. I've asked Google today, and this is in 2023, and I don't have the 24 data, but I have the 2023 data. As of the third quarter of 2023, the top 10% of Americans own 93% of all the stocks, which is the highest level on record. So great. So we have 10% of Americans, the wealthy Americans, that own everything. So we have, let's read that again. As of the third quarter of 2023, the top 10% of Americans own 93% of all stocks, which is the highest level on record. The richest 1% of Americans own 53% of stocks, while the bottom 50% own 0.6%. So that is 1% of Americans own 53% of stocks. Holy shit. That means that all these people that are running around, so if you put in, you and your friend groups, put in everybody, you line 100 people up, and you have one person that owns almost everything. Yeah, that's what it says. Is wealthier than everybody else combined. So, what does that mean? Well, if you have such wealth and disparity, these people that are so wealthy, they don't care about what you're going to do. They don't care about job growth. They don't care about anything else. They just growth. They make money even if you're at the house being unemployed. They don't care about that. They probably make more money with that, because that means companies are going to do better. So it's a good saying that I read this quote about Warren Buffett once, and he said that he made more money investing in Coca-Cola than the Coca-Cola CEO did while he was actually leading the company. So it's crazy, because Coca-Cola pays dividends, right? So it is so interesting to me to see that there's such a huge wealth gap, and people tell me, oh, you have the opportunities to do it too, or you have the, you have access to all that. And that's where I get really mad, because access doesn't mean anything. They say, oh, you have access to the stock market. Yeah, you do. You also have access to buy Donald Trump's Mar-a-Lago mansion, or you have access to buy a building on Fifth Avenue in New York, but that doesn't mean that you have the means to an end to do it. Access doesn't mean anything. Access to healthcare and all that other stuff doesn't mean jack shit. Access just means you can walk in and you can look around and be like, oh, this is nice. Access basically means the same thing as when somebody says, a realtor says, hey, I have an open house, do you want to come by? That's what access means. You show no financial proof that you can buy it. You BS a little bit with the realtor and says, oh, this is nice, look at this huge island on the granite countertop, and you basically just looked around a little bit and said, oh, this is great, and maybe you peed in the toilet in the bathroom, and then you went out. And that's what it means to have access. And that's what they also say about poor people, like homeless people, poor people. They say, oh, you have access to all these social services. That doesn't necessarily mean that they're going to actually get help. That just means that they can walk in the door and talk to them, and then they might say, oh, we're closed, or we're over full. That doesn't do anything for anybody. But you have access, so that's like, oh, okay, that doesn't do me any good. So the stock market isn't a representation of anything. It's just a representation of how great the super duper uber wealthy do. And I'm trying to get into stocks. I'm also trying to get into real estate. And yeah, it's scary. It's really scary when such huge amount of people own that much majority of something. So when you have small groups controlling big portions of land, stocks, they control the market. They're in control of they control the tide basically. They can control what the, from which side the wind blows. They control everything. So let's get into market conditions. A few large companies have influenced the stock market. Yeah. Investor sentiment. Stock prices can be swayed by speculative behavior, investors' emotion, and not just the fundamentals. They have pump and dumps. They got a bunch of stuff that they have speculations. You can buy futures, you can buy puts, you can do all this kind of crazy stuff and gamble, just like in Las Vegas on the roulette table with your money that you can do in the stock market, and it's not good. Company performance or economic health. Companies can profit and perform well in a poor economy, even though the cost-cutting measures, like layoff, that is another thing, that the company's performance versus the economy health. They lay people off, and then the stock goes up because you now make more profit for your shareholders. And when you look at the image I just had up, it's the 10%, the uber wealthy made more money. While you lost your job, you lost your livelihood, the uber wealthy made more money. So do I fault them for that? No, I just think that we don't have the ability to get up there. They say, oh, America has you can make it from dishwasher to CEO. Yeah, you have, but those are few and not many. But you have the possibility to do it, and I think if there's a place to do it, it is definitely in the United States. That's why I 7 years ago decided to move here from Switzerland, because I felt like in Switzerland it's even harder to do than it is in the US. So, and I'm going on my own journey with trying to become wealthy, because I do like it. So I'm not there by any means. I don't own that many stocks. I don't own that much real estate. I'm doing well for myself. I'm kind of proud of that too, but not nowhere near where these uber wealthies are. So global influence. Many US companies are global, and their stock performance may reflect international markets rather than just the US. Yeah, Coca-Cola stock is huge, right? So Coca-Cola is worldwide, and PepsiCo, Nestle, and all these other big companies. Nestle's not an American company, but they all have, and they're all traded on the stock market and in the New York Stock Exchange, and you can then trade and do things. And let me know if you're investing in stocks, real estate, what's your preferred method. And that's pretty short-term focus. Let's look at the other one. The stock market often reacts to short-term events, quarterly earnings rather than long-term. That's why Tesla took a beating last quarter, because they didn't come in at quarterly earnings. That's why Starbucks, also didn't meet quarterly expectations. So it's interesting. It's really, really interesting when you look at where we're going and how this whole thing's going to play out. Because I truly, truly believe that when you have a stock market that is so big and has such momentum like the US one does, and we have so many big corporations, and we have such divided groups of owning stocks and not owning stocks. I'm wondering if you guys know people that are heavily invested in it and how they're doing, because I read studies a little while ago that said during an uprising in the stock market, you can just have a drunken monkey throw darts at a board with stocks on it, and they will outperform better than and other investors do that are seasoned professionals at it, because it's just like Warren Buffett says, raising tide raises all boats, right? So even your shitty stocks will rise, and then you just got to be smart and get out of it. But then you can also gamble and lose it all again. So it's really, really interesting dynamics when money's involved, and you got to sell on the right time, you got to buy on the right time. Then there's capital gains. You want to cash out to buy a house. You pay capital gains tax, then you pay property taxes. So one thing I know is that the government always gets their half. They always get their cut, and they're never at the end of the line. The government is never at the end of the line. You're always the last person that receives the money. It's like, it's taxed here, let me take And if you lose like Fidelity, they're like, oh, we're going to send some of it right away, and you're going to pay taxes, some of it trading fees and all that. And then you get the money that's left over. So you're always the one that's way in the back with the money. So I think that's just funny. So how they protect themselves, but then they don't protect you. And as I talked in my other video 2 days ago, I said if you're a CEO or if you're a C-suite executive, you always have a golden parachute. You know friends that will hire you again on the board. You're in the circles of the uber wealthy, and you always find a way how to make ends meet. And even if you're unemployed for a little while, like this other guy at Lehman Brothers that I talked about like 2 videos ago, and he's like, he was unemployed for a little while, but now he's back at the top again. So it doesn't matter if you run your company into the ground as a C-suite executive or a CEO, you can still get employed again and redo it again, and investors will give you money again. So it is just a crazy thing. But when you, as an individual, are coming to hard times, medical stuff, you can't go to work and file bankruptcy, then nobody's going to give you a loan. It's going to take you years to get back to where you were before. And if you're a C-suite executive in the banking sector with all your big buddies, it doesn't take you long to rebound. Do you agree with that? Let me know in the comment section below, and I'll see you in the next one.